That's my quant.
Your what?
That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving!
Sell it all today.
Or look at his face. It's beautiful!
Welcome to the fucking show.
All right. Let's get Mr. Patel on the right side again. How are we doing, sir? It's been since the 11th of November, I believe, since we did a live stream, and I was updating our little ticker tape on the bottom. And let me ask you a serious question. What do you think Google's price was on November 11th when we did the last live stream?
It's like 200? No, it was like 1.8. What was it? 180?
257.
257
November 11th. Yeah.
All right. Well, there you go. Google schmoogle, man. Anyone who's long Google, congratulations.
Yeah, it's been a fun ride for that one. So it's been interesting, and wasn't expecting it to run as quickly as it has. But anyway, November 25th, 2025. As always, participate in the chat by just hitting the subscribe button. It's completely free, or contemplate becoming a member. And that's that. So Apple 277 still at all-time highs. Amazon 230. Dutch Bros at $57. Google at $326.59. Palantir retracing back to 165. We have Rocket Lab at $43. SPY at 676. The Q's at 611. And Bitcoin was up around 112,000. Now it's at 87.7. So that was about 2 weeks ago. Oil above $58, just above. And natural gas in the United States, Henry Hub, about $4.24. Chris, is this last comment here in the chat true? Did you sell all of your Venture Global and Next?
No, not at all, dude. That's you gotta have some patience when you're dealing with the Widowmaker. You know, the Widowmaker is not like investing in energy is not for everyone, and literally, this is one of those times where you got to suck it up and just kind of go through the motions of everything. And it, like I said, it sucks. It's one of those times where things happen. But I think today is a great day to at least explain what is happening and why it's happening, so that people understand, like, okay, where's the actual opportunity in this, and where, hold on one second. Okay, there we go. I was actually crafting a dashboard for everyone so that everyone could see what's actually happening. Remember this like program that I did a while back with that I showed? I think I showed it to you too, which was, this is the LNG equation for net spreads on liquefaction. Can you hide the comment section so this way people can see the actual like chart? Okay. So one of the things with Venture Global is that most liquefaction operations, they typically have a business where there are fixed tolling fees in place when they sign these long-term deals, right? So they say, look, we are going to charge you X amount of money to liquefy natural gas. We're going to charge you, not only are we going to charge you the liquefaction fee, but we're going to charge you whatever the cost is on the natural gas that's coming into the facility, and all the shipping and everything you have to handle yourself. And basically they make money on just that tolling fee, right? So imagine right now you're driving and you're going from New York to New Jersey. Essentially, you're paying the toll to go between, and that's what New York City is making, or New Jersey is making money on. Venture Global is also locked into a lot of those deals. So if you go to Calcasieu Pass, majority of the production that they have goes through that. The way that Venture Global is set up, to some degree, initially when they do their facilities, they have this long commissioning cargo phase where they essentially sell things on the open market. So imagine right now when you're going through that same toll bridge, instead of paying a fixed fee, you're paying based on demand, right? So if the demand, not only demand, but basically congestion. So let's say there's a crap ton of demand to go over the bridge, the charge is like $20, right? So if you go at like 4 o'clock in the afternoon, it's going to cost you $20. And let's say at another time, if you go at like, 3 in the morning, there's no one, so it's only $1, right? So we're in the same position right now in natural gas, unfortunately, where there's two things that are kind of disconnected a little bit. And once again, this is why they call it the widowmaker. Natural gas prices here in the US have gone significantly higher. Mostly because, number one, we've got a little bit of a cold spell here and demand has just really outpaced. We've got a lot of the build out in data center. And then also we've got a lot of new facilities, including Venture Global's Plaquemines project coming online. And the amount of LNG that's being exported is causing kind of a demand spike. On the other hand, we have really low energy price, like low oil prices. So if you guys know, and we spoke about this last time, there's 2 types of natural gas that you can get. You can get natural gas that's coming from areas like in Pennsylvania, where they're literally you're putting a pipe in the ground, and I'm just simplifying, just putting a pipe in the ground and you're getting natural gas out of it, and that's dry gas, right? So basically it's just coming up, boom, you take it, you put it through the pipes, it goes to the liquefaction facility, and then you liquefy and you send it out. And then there's another type where you put the same pipe into the ground, and as you're drilling oil, one of the byproducts is natural gas. So what happens is, in dry gas formations, they're always going to drill for natural gas based on the break evens of that natural gas. So in the break evens in the Pennsylvania area are, I forgot, what is the Marcellus shale? It's the Marcellus? Okay. So the Marcellus shale is around $2.50 per MMBTU. If you go to Haynesville, the break even is around $3.50 for break even for MMBTU. But the Permian, where a lot of our natural gas also comes from, there is technically no break even because it's just a byproduct when you're drilling oil. So if you're drilling a lot of oil, you're going to get a lot of natural gas. So natural gas prices could be at $1 per MMBTU, and it's fine because you're not really too concerned with the natural gas, because you're making most of your money actually coming from the oil drilling itself. Right now, we're in a position right now where oil prices have gone down significantly. So a lot of the natural gas production that's in the US that typically happens as a byproduct, there's not a lot of it coming out because there's just not a lot of drilling activity in the Permian when it comes to getting this natural gas. And right now, demand is spiked, right? So when you have a demand spike and at the same time you've got a supply that hasn't caught up to that, you get an increased price in natural gas. So if you guys look at this chart right here, if you see this red, this is the Henry Hub price. Okay, so this is the price that natural gas gets that currently is traded in Louisiana, right? So everything goes to Louisiana. So right here in August, the price of Henry Hub was around $2.70 per MMBTU, and long term, usually, like for the last few years, you can see here it's around $2. It's gone down to like 160 something, right? But recently, because of all the development, Henry Hub prices have gone up significantly, right? So they're up to like $4.67. I mean, this spike right here was primarily when Russia invaded Ukraine. So, that kind of caused a giant demand move up here. So, but it's not nearly as big as what the cost in Europe was. So if you look at here, Europe during the Russian war and everything else in the initial days, literally the natural gas was around $43 per MMBTU. That's what the cost was landed in Europe. So imagine right now the spread that you're going to get between buying something at $9 and selling it for, like 40 something. It's a huge amount of money that you make. And that's one of the reasons why a lot of the LNG traders, they absolutely killed it those couple of years. But one of the things that's been happening is US production has gone, we've done our part. We've actually done a great job of replacing a lot of natural gas that's coming in from Russia, and we've been shipping a lot of it. And what's happening now is that spread between the two has been closing, and you can see here in February the spread was $17 in Europe per MMBTU, and in the US the cost to us was $3. So the spread between the two was very wide. So it was almost $12 spread between the two. Now you're seeing this kind of convergence happen. So you're seeing this $10 in Europe, the landed cost, and the cost for us is about $4.50 per MMBTU. Just not cost of liquefaction, just the two prices between the two. Venture Global, of course, when you're doing spot prices, the money that you're making is the difference between the cost to liquefy and ship the natural gas over to Europe, and whatever's left over is your profit margin, right? So you can see here on an MMBTU perspective, in February, the profitability was around $10 per MMBTU between the two. So you were actually making, from a liquefaction fees perspective, like $10. But here's the thing: usually you never fully get like the $10 price, because you're not always buying and selling at the exact same time all the time. What typically happens is you have to do something called a forward contract. So you tell the people in the future, like 6 months out, like, hey, guess what, I'm going to be able to deliver you natural gas at this price. And you sign a contract, and basically each one of you has counterparty risk, because the other person is saying, I will buy it from you at 10. You say, I'll sell it to you for 10. And basically you agree on the prices. So the challenge that you run into, though, is that because there's fear in the market when natural gas prices have kind of come down, so that net spread went from about $4, well, on average all throughout the year, about $4 to $5, now down to like $1.25. Other businesses like Cheniere and even Rio Grande, they're not being killed right now in the market. Why? Because number one, Rio Grande isn't really producing any LNG anyway. But if you look at the contracts that Rio Grande has and like Cheniere have, 90% upwards of their natural gas is fixed contracts. So to them, this doesn't matter. Natural gas can go to like 200, it doesn't matter. It could go to $1, it doesn't matter. Why? Because they have fixed fees, just like we discussed earlier with the toll bridge situation. Does not matter what time of the day it is, they're getting paid. Venture Global is going to get paid eventually when they fully go commercial with their plaque mines, and they're going to be getting a net spread of about between $2, $2.20 and $2.65, whatever the price that they've negotiated with their off-takers are. So purely from a volume game, Venture Global is fine. They can pay their bills. That's not an issue. Their credit rating is okay. The challenge is they're anticipating about $4 to $5 of liquefaction fees on a blended basis when they fully go live with like CP2 and some of their other facilities. But if you look at their earnings presentation, they were hoping to get about 4, maybe 5 billion in EBITDA next year on spot. So basically they were going to make about $4 per MMBTU. Now, because of today's prices, it looks like it's $1. So you're talking about a huge downward move in future EBITDA. Now, here's the thing: when you're doing spa deals, you don't have to worry about commodity price risk. But when you're doing, what is it called? Spot pricing, you're dealing with commodity risk. But at the end of the day, that's one of those things that you have to deal with as the business model for Venture Global, right? Venture Global is more exposed to spot. Now, Venture Global, something else can happen too. Like, let's say, natural gas flares up, all of a sudden you've got yourself huge profitability again, right? So if you're an off taker, you would hate for them to be selling on spot, because you're paying a big wide difference between the two. So if you look right here during when Iran invaded, when the whole like US were bombing Iran and stuff, you can see right here the profitability went from $3 to like all the way to like $6 per MMBTU, the spread price between the two. And and Venture Global stock price went from I think it was like 7, 8 around Liberation Day to almost $19. And then once, the whole thing didn't go anywhere, spot pricing and everything else kind of came down and we went back to normal. But since then, you can see this trend has been kind of closing. So this is a problem for Venture Global, but this is a problem for anyone who's works in commodity pricing, basically. Sorry, Matt, do you want to add anything to this? I know.
Yeah, there's a couple caveats and corrections that I have there. The one thing I would like to note is you stated that drilling is down, but that doesn't necessarily mean that production is down. So that doesn't necessarily mean that the supply of natural gas is actually going down. It's more just a demand. And so, like you stated, I don't want people to think that the amount of oil production is actually going down. And then
let me rephrase.
Okay,
let me rephrase. Yeah, sorry. No, let me just rephrase because I want to make sure I correct myself, because you're absolutely right. The growth is not there, right? So what I mean is there's still oil production, but the amount of growth in natural gas production is not getting higher. Or is that correct or not?
Yeah. I mean, it's definitely slowing down to an extent. I mean, surprised that we're actually close to 14 million barrels a day, but yeah. And then another piece that you stated is kind of a blanket statement that natural gas production is always free. That's not always the case. If just a few years ago, before some of the pipelines were built in the Permian, actually people had to pay money, upwards of 25 cents or even more sometimes to pipe the gas because demand was so high for getting rid of the gas, but they couldn't flare it. And so now it's a different situation where some of these pipelines have been built out, but it's not always a guaranteed fact that natural gas will make money in some of these as a byproduct of some of these assets. And then what was the third thing that you stated? You stated that Rio Grande LNG sold 90%. That's only of trains 1 through 3. They've sold 92, 93% for spot contracts for trains 1 through 3. Trains 4 and 5 both sit at about 75% sold. So 4.5, 4.6 MTPA for train 4 and train 5 respectively out of 6 MTPA for train 4 and 5 respectively. So just wanted to state that. And then what was the last piece? I'm not 100% certain if you could walk through how you get your equation. I find it very hard to believe that the spread right now is only $1.25, being that we're at about $11 in TTF, and it was like $4.20, $4.30. Are you basically stating that it costs $5 to ship and board and get everything over? I know we've talked about this in the past, and so if you could just kind of walk through the equation itself, that seems very pessimistic. But all in all, what you're saying is correct. I mean, things at a TTF basis, which I think a lot of people assume are going to stay at $13 to $14, have definitely come down. And for people that are wondering what TTF means, it's the Dutch title transfer facility, where they basically export a lot of this liquefied natural gas. And then if you ever see JKM, that's the Japanese market.
So the first thing I loaded up was just what is that thing called? The price in Dutch TTF, right? So that's going to be A, right? And then the cost of regasification over there is going to be about 0.70 cents, right? Then you have the cost of the natural gas itself, which is B, and that's coming from Henry Hub prices times 1.15, which is the cost that over what is it called? It's the cost over the upstream charge that you get. This is what you usually do with a fixed contract when they do it. So you get 115% of the commodity price. And then over here is the cost to ship, which is 75 cents. And then the profit about $2 for like maintenance, CapEx, and everything else.
So the $2 is what I'm kind of questioning, right? So to me, the liquefaction cost itself is anywhere between $1.85 and $2.25. And so technically the cost of that for Venture Global would be less because they wouldn't be selling the liquefaction fees for $1.85 to $2.25 to other people if they weren't making money off of it. So I think this was where we've had contention in the previous equation as well. I mean, so you kind of have to think like what exactly in terms of that liquefaction fees are they actually getting in terms of margin? So yeah, that's that. I think that was where I was kind of at. I mean, I'm not saying that you're wrong in terms of the fees, the profitability going down. That's for sure. But I think that $2 part is a little bit much.
Well, the thing is, I'm pretty sure that's the equation that they're using because even when you're looking at their earnings, right, their earnings slides, that's the same one that's like the same amounts that they're going with. So if we look at so
they're selling liquefaction fees at cost, Mr. Patel.
Pretty much. I mean, at least from what I'm seeing. Look at this.
So you're telling me Calcasieu Pass isn't making any money?
They're not making a lot of money.
What you're telling me is that they're basically the profitability for it is what they're selling it for.
I don't think that's the case. No, it's a little bit. Hold on. It's in their slide presentation. Okay, so right here. So this is how much they're making on EBITDA, right? Like what they're expecting right now from available cargo. So even in their calculations, they're from. Okay, so let me rephrase. My calculation is showing EBITDA, not like EBITDA per MMBTU right here, right? So available cargo is at $4. That's what I'm calculating, and it's the same thing. That's how they're doing their calculation as well. So if you look at Plaque Mines, when they had their fixed contracts last time, it was around $6-7 that they were contracted with throughout the year. But if you look at Calcasieu Pass, look at their right here. Look at their liquefaction fee portion. It was $1.76.
And you're saying $2, right?
Yeah. I mean, look at their Q4 contracted cargoes, $2.14. And throughout the next year, all throughout, like see in Calcasieu Pass, all throughout 2026 is $1.93.
And let me just double check. Are you subtracting that $2.70, or are you adding that $2.70?
No, I'm subtracting that $2 from that.
So that goes again. What I'm saying, that liquefaction fee is a positive number, and you're subtracting it.
Yeah.
They are charging that $1.76. They are charging to the customer. Yeah.
Yes.
So you're saying basically that they aren't making any profitability off that $1.76 that they are.
No, that's what I'm saying. That their profitability is $1.76 or $1.37 right now. That's the challenge. Like if you look throughout last year, their profitability, like this, think of this as a liquefaction fee that they're getting, right? When they're doing their contracts, this is what you're getting. So that's why all throughout July, it was $4.23. Even, and that's
let me see the equation again. I just want to make sure that I'm thinking about this.
Right here.
Okay, so you're subtracting TTF minus 70 cents, and then Henry Hub, and then you're adding. Okay, very good. And where's the 75 cents? I'm confused on the 75. That's what
the
you're
shipping. That's shipping. No, that's a cost that you're going to bear for shipping. Remember, they have their own fleet, and right now shipping has gone up, but they have their own fleet. So I'm assuming that the cost is going to be fixed, but sometimes this is not going to be 0.75. Like right now, if you look at cargo rates for natural gas,
why would you charge 15% on top of Henry Hub? Just out of curiosity.
For running costs for the facility itself, electricity, for the electricity and everything else.
Okay. I mean, that's what they charge the customer, so that's why I'm kind of curious. And that's why I'm being peculiar. Is like I think that you're you're intertwining what they charge customers and what they should charge themselves.
Well, remember, how did they get their electricity? They use the natural gas to produce the electricity, right? To generate.
Yeah, but that's a couple percentage points. That's not 15%.
Is it? Like I said, I'm assuming that what they're going to be doing is taking that the natural gas they're going to be getting, utilizing a portion of it for liquefaction, a portion of it for what is it called? For electricity production that they're going to use to liquefy.
Yeah.
Because they're definitely not coming right out of the grid. Like you wouldn't, I mean, the amount of electricity required to liquefy this thing would be rather expensive if they were going straight grid. I mean, I don't even know if they're hooked up to the grid like that.
Yeah, I just think that if you're talking about Venture Global themselves shipping, it's going to be different than if they're selling it to somebody, because I don't think Venture Global's profitability isn't dependent. So like if they're selling on spot to non-Venture Global cargoes, then you shouldn't have to bear the cost of shipping. So that 70 cents initially in the first part of the equation should disappear.
Right.
That's on whoever picks up that cargo.
Yeah.
So I don't know. I'm not saying you're wrong. I mean, it just seems like you might be hitting Venture Global a little bit too much here.
I mean, the equation works out in a sense that if you look at their own metrics, this is the confusing thing that we're dealing with right now. Like Q1, when they did their first report, they actually mentioned this, where how they were getting their liquefaction fees. Let me just actually go to it real quick. So I'm using what they said basically. VG, Venture Global, and research. And where's the thing? Okay, so I think the first quarter was May, and the earnings call transcript. View transcript. Let's see. Damn it, where's the damn transcript, man? Oh, there it is. Okay. And we can go to as you see on the left, the forward curve reflects the market expectations, blah, blah, blah. Very attractive.
I mean, I'm just like if you go back to the Plaquemine slide, I mean, you could search through this, but they made on average a good amount, like $6 or $7 per MBBTU in the second quarter, or was it the third quarter? And so going back to your graphic, it just shows that they're probably not making.
Well, see, that's the thing. Once you go into what is it called? Once they go into like commercial operations, the liquefaction fee that they have is rather low, you know.
Mm-hmm.
So the thing is,
spot, right? I mean,
say that again.
You're talking about spot, so I mean, you're looking at $7.46.
Yeah. So
you just kissed it.
Yeah. Sorry.
And your graphic was showing $4, $5, right? So that just goes to show that what you're hitting them
but remember, they were doing contracted cargoes, right? So right here, the Q2 to Q4, right? So when they did their contracts in Q1, that's what they were able to get. They were able to get 746. Because remember, if you're in January, you're going to contract for the rest of this year, and so your cost right here is going to be good, right? Remember, the price of natural gas back then, the spread was actually really wide. So look at over here in December, January, February, the spread was close to like almost $8 to $10. So they were able to lock in contracts for the rest of the year that were very attractive. But as you know, as new capacity comes on, you have to roll off those old contracts and you have to take on the new contracts. And those new contracts, it's even in their slides. Look at this. The contracts that they had for 2020 right here for 2026 is $4.53. Right? So the contracted cargoes that they had from Q2 to Q4, they're $7.46. Q1, their contracts right now is $4.53. I mean, this, let me see which, and this is from May. So if we go back to, let's say, March of 2024, which is like January. This was right here. Look at this. So their long-term SPA deal is $1.97.
Yeah, that's Calcasieu. That's
right.
fully
That's what I'm
contracted
saying.
pretty much.
No, that's what I'm saying. That they're making on a contracted basis from Calcasieu $2 per MMBTU, right? They had contracted in Q4 2024, their contracts, they had 32 cargoes. They were contracted for $8.79. And then literally as the forward curve has been going down, it's been going down the other way, right? So Q2, their fixed liquefaction was around $3.85 because you had that the majority of the cargoes at the time were selling for $1.97 that were already contracted, and then you had very few non-contracted ones, which is like one or two cargoes. Because I mean, that's the thing with Calcasieu, right? Calcasieu doesn't have a lot of excess cargoes. Was only one, so that kind of raised things up because the commissioning cargo was almost $9 at the time, right? So if you blend them together, you can see that this is how they were doing really well. But now that they're fully contracted, they have 5 additional cargoes potential for Q4 of 2025. Now, the thing is, if they're only getting, like I said, they're only getting $2, $3 right now because of the net spread is compressed, that means their profitability is not going to be that great for at least in the short term while natural gas prices have come down.
Mm-hmm.
So that's the logic that I'm using here, which is, look, especially on a forward basis, like right now, if they wanted to go out there and do contracts, I mean, we could look at last quarter as well. If you go to 2020 last quarter, okay, look at this. This is Calcasieu, so let's just do Plaquemines. Okay, look at the contracted cargoes that they have right now. They did 20 cargoes that they contracted in Q1, another 14 in Q2, and the contracted that they have is around $5.41. Remember, there's no commissioning on here. This is purely contracts, right? Yet last year they were able to get up to Q3 to Q4 of this year, which is 2025. They were getting a weighted fixed liquefaction fee of about $7. Next year, the contracts that they have are for $5.41, and this is from July. So imagine right now you're in a position in November, December, trying to contract out for the rest of Q3 and 4 of 2026, which is what they are probably going to be doing. The cost of that is not going to be the greatest because that's that. So let me just go to it. Sorry, guys. This is Plaquemines right here. So you see the cargo forecast that they put, like how many cargoes there are, and the weighted liquefaction they put year to date, but they don't have contracted. This is for Calcasieu. Where's the one for Plaquemines? What the weighted average is? Look, they conveniently didn't put the contracted cargoes, how much that they're getting. They just put the raw number. You see that? You see the difference between the two slides, Matt? They didn't state what the forward liquefaction fees are for the rest of the cargoes.
That's because they probably don't have them all sold yet.
Yeah, that's probably the case, but they usually broke it down before. Now they just didn't. They left it out.
But yeah, I mean, I would just double check and think through. Like, it's not for Venture Global to pay for their regasification costs or shipping costs, right? Only if Venture Global is the one that is shipping it, right? That's a different story. Then you need to take into account some of those things. So when you're the one picking it up on the boat, you know, that's not up for Venture Global to be paying for regasification. So there's a piece there, and it's not for Venture Global to pay for shipping. That's on the shipper, right? So there's almost two different fees that you need to look at. And I think that equation would probably be cleaned up a little bit.
I think let's do this. Next time I'll bring up all the because this was a question that they asked during one of the conference calls. Right now it might take a little bit too much time to go through it all, but let's bring it up together, right? And we can kind of like put it together and actually get the real algorithm going. Because this is the algorithm that I got from what I understood the fee to be, right? So if we just look at it together, maybe we can actually come up with the right pricing on it, you know?
Yeah.
So this way we can actually get like how they're calculating their liquefaction fee, basically their fixed liquefaction fee.
I mean, that's the equation that we would use if you were buying off of them and being the shipper yourself, right?
Yeah.
So that's kind of the fee, because if you're say leasing a boat, say you're a major oil and gas company and you want to contract some of these boats at spot, that's the sort of profit you'd be making if you were leasing a boat from somebody and then paying all those fees. But if you're not, then some of those fees would go away.
Yeah, but I mean, when you're selling on spot, you're not basically selling what, you know, from the facility itself. You're like guaranteeing delivery also, right?
No. When you're selling spot, that means somebody is somebody is calling you up and saying, I want to be at your berth point on this date, fill up my boat.
Okay. For some reason, I thought,
but then that's what that it's free on board, right? So basically, they basically put everything on your boat, and then it's yours after it's on the boat, unless it's Venture Global, unless it's a venture boat. Then after it gets on the boat, hands free. The contract is done. That's what the spas are for, right?
Yeah, but that's why I thought when it came to the spot prices, that they were going to handle the regasification part of it, and they were also going to handle the shipping cost, and then you would basically pay what the price was at destination. Because I mean, and you know, basically the thing that Venture Global would charge you was that liquefaction fee, and they would also charge you the fee to ship it to you, right? And then the regas. Because I mean, isn't that how they're making money on their shipping right now? Like, how are they making money on their LNG ships?
That's part of it, is that they're actually getting it. So how they make money on a normal spa deal is they are charging $2. Let's just say $2.25 to liquefy it, and so then of that $2.25, they're going to make a margin on that, right? So it doesn't cost $2.25 to run the entire facility, right?
Right.
And then they're also making a margin off of buying and contracting the gas that they're getting, which is the 15%. So yes, some of that will be used for expenses. Some of it will be used for, there's going to be shrinkage, right? They're going to buy some of the gas. Of course, they're going to have to use some of it for fuel, but it's not up to 15%. That's just astronomical, or very inefficient. And so they're making part money off of that. And so what you're likely seeing is for a lot of these contracted cargoes that are actually spa deals, you're likely going to see anywhere between $3 and $3.25 of actual money coming through per MMBTU. And then I would say probably 10 out of that 15% that they charge on top of Henry Hub is probably going to be pure margin, so like 66% margin on that. 5% is going to go to fuel, etc. And then and or just transaction fees associated with actually contracting that. And then you actually have the liquefaction margin that you're getting, so the ops margin associated with that, which I would probably assume 40 to 50% of that. So I would assume that they're getting about 80 cents to $1 of actual ops margin on that particular $2.25 or $2.20. And that profit is how they're making their money. And that basically guarantees that they get it onto these boats. That's what these spot contracts are. Like the Tokyo contract that they signed today, Tokyo has to supply that boat. That's not up for Venture Global to supply that boat. It'd be different if Venture Global was, and that's where it comes into the piece with the having your own boats, is because you no longer have to charge that extra 15% on top of Henry Hub, right? So you're just getting gas at cost, whatever you can get it for, and then you no longer have to pay for the $2.25. You just have to pay for whatever the cost is, and then you can get whatever margin that is, if there is a margin, right? It could be negative, like you're stating, like it's shrinking, right? And then if you're shipping it yourself, then yes, of course, you have your own boat, so you don't have to pay the shipping fee anymore, right? Because you have your own, but you will have losses, right? Because you are using that LNG to power the boat, but then you do, like you stated, have the regasification fees. And so that's part of the benefit. There actually was, I think, like $150 million net to date, with I think just 2 boats. So of the income that they've made this year, 150 million came from those 2 boats, and then I think there's supposed to be 6 or 7 boats by the middle of next year in total.
I think they contracted some too. So yeah, they have a fleet. They have like a shipping fleet that they're developing alongside it, so that they're not dealing with the.
No. You're not wrong. I mean, in terms of that, that is the reason why Venture Global is going down. Is a lot of that. I just don't want people to think that Venture Global is on the hook for paying everybody's shipping costs. That's just not how it works.
I have an idea. Let's, like, when we go offline, let's actually, because we could actually reverse engineer, because now we have a year's worth of data. We can actually reverse engineer what the commissioning cargoes, because the commissioning cargoes are going to be what the spot pricing is going to be, right? So we can actually look at what the pricing was 6 months before and use that data to get the commissioning cargo, like from a contracting standpoint, and then get like an EBITDA number on what kind of production is out there and how much money that they get based on that spread. And like I said, and then we can actually rework that what is it called? That equation to be more accurate based on like the information that the company has. Yeah, note that VG also has direct ownership in regasification terminal as well. Then there's an additional money savings. Yeah. There, like I said, there's a little bit more to it than I think we understand right now. But I'm probably wrong, to be honest with you. And this is where I think we have to kind of like come together and just determine what the actual pricing is. But I feel confident enough to say that, at least from a directionality standpoint, I'm in the right direction with the spreads are compressing.
Yes, 100%. Spreads are compressing for sure. It is somewhat scary. There's a lot of people out there that think there's going to be a supply glut. But I think that right now, I think that what we're seeing in the United States is a lot of cold shock, and also a lot of people fearing about where energy is going to come from for all these data centers. And so I think you're seeing Henry Hub go in the right direction for, local oil and gas producers. A lot of local oil and gas producers are really excited because they mostly do projects right now, $3 Henry Hub, and we're at 50% more than that. So they're all happy because, we haven't seen gas prices like this in a year or two. So, but in the European markets, things are things are cheap, and it's quite surprising.
Yeah.
Knowing how little drilling and stuff is going on in the UK. Surprising that gas is so cheap so far.
Well, that's the other thing too. Some people are speculating that the end of the war is going to have Russian natural gas kind of make a massive comeback, and that's going to also lower the prices in Europe, right? So then you have a lot less Chinese importation because the Chinese have been cutting back, and then now you've got the Europeans that are going to be quote unquote not cutting back as well because they're going to get more from Russia, and so you've got those competing cargoes. I mean, not cargoes. You've got the competing piped gas, so that's a challenge. So now you've got the Chinese that are already getting Russian piped gas from that Siberian Express like pipeline that they built. So now your main customers are going to be like Korea and Southeast Asia and Japan, right? So this was Expand Energy, which was like the rebranded from Cheniere. I thought there was a very interesting slide on their production right now, and what they're looking at. Second production. Okay, so this is the costs that they're actually running right now, and they've got a bunch of collars in place. Look at this. Right here. No, that's price per gallon, BBL. This is not it. Where's the damn natural gas, man? Is this it? Haynesville. Man, it's hard to always pull up the slides when you're per MCF. It was in their slide deck. It was actually a really good one. Okay, right here for their natural gas. Look at this. So this is the volume that they have swaps for, and they've contracted this out, and they're making a pretty good margin right now. Look at this. This is the call that they sold. So what they've go away. So what they've done is sold a call for $4.67, and at the same time they've bought a put for $3.42. So they've got that nice band gap between the two. So they've hedged themselves where they're always going to be making money. And they've done the same thing for 2026 and 2027. Not all of their production, of course, but a good portion of it. So they're going to be making at least like $4 and something per for the next at least 2 years. Let's see. So yeah, they're super excited, man. Yeah, they're making good money. And it's the same thing. So it's in their earnings slide presentation of just how many facilities are coming online next year. So between 2027 and 2029, this is the amount of LNG that's going to be coming online, basically. You know, between Plaquemines, Golden Pass. So the demand for natural gas is going to grow significantly. So
yeah, it's definitely interesting, and to give people an idea, it's like what we're talking about. We're not just talking about like blanket options, right? We're talking about when they sell these puts and call like these collars, they actually have to deliver at these prices, and so there are some people out there that speculate, right? That are just like, you know what? Let me try to sell. Let me try to just sell these financial tools, and what happens with something like that is, if you go back to the pandemic, that's why oil was selling at negative oil prices. Is because people had basically these financial contracts, but they didn't have the oil to meet that demand and or space. And so they were trying to just offload it for whatever they could. So they were taking losses because they couldn't afford to take actual possession of these things. And so what ends up happening is a lot of these people are actually looking at how much they plan on producing and hedging a certain amount. And some of it's actually required by governments and not governments, banks, to be like, hey, you know, you have to sell at these prices for us to grant you this money. So some people might be saying like, because obviously you could potentially limit your upside, but you're also limiting your downside. So what they might say is, in order for us to give you the $60 million, you have to hedge 80% of your production so that we can guarantee that you're going to make that money. Otherwise, we're not going to give it to you because oil prices could crash, gas prices could crash, and so the banks might sit, as a guarantee. So that's how some people leverage collars, and that's why you might see some of the smaller companies leverage collars more so than maybe some of the larger companies that have bigger pockets. It's because those guys are okay losing money in the short term if that means they're not necessarily hedged in the long term.
Okay.
Anyway,
So according to them, this is their long-term pricing. This is what they're looking at, basically. Illustrative representation of net spread that they use. So the cost of, like, let's say right now the price that they have in destination, right? Illustrated destination pricing. So it's, let's say, $12.25. The cost of feed gas would be $3.75. The cost of liquefaction is 69 cents. The shipping cost is 80 cents. And the implied net spread would be $7, right? So this is what we should probably use as a benchmark.
Yeah, that's closer to what I was expecting, and that shipping cost, I believe we have to double check. That's if they're the ones that are actually shipping it.
Mm-hmm. Okay.
So I think that this is, if you're looking at it, because it's like shipping cost reflects the average Atlantic charter rate and cost of boil off, which if they're not the ones that are shipping it, then you could potentially get rid of that 80 cents because they don't have to bear that 80 cents, if that makes sense.
Okay. Feed gas cost with Meli LNG producer utilizing tolling models foregoing ownership of the natural gas itself. Feed gas costs reflect buying, blah, 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 blah. This cost is intended to pass through to LNG producers. The off-taker bears the risk of fluctuations in Henry Hub prices. Fixed fees are designed to cover LNG production, producers fixed maintenance, high equity return, small portion of the fee, 10 to 20% usually escalates with inflation. Fixed fees have historically fluctuated and approximately between $2 and $3 per MMBtu for long-term contracts, though inflation has pushed these prices higher. Yes, this is actually a good slide to look at. And basically, like I said, there's also one other slot. There's also
the top. Sorry, it says the variable cost to the top. It goes to variable cost down below with the 50% Henry Hub. If you scroll down.
I mean, let's just use this really quickly. Right now, the cost of feed gas is like $4.50, right? And the landed price in Netherlands is $10 right now. So it's like $6 spread between the two minus 69 cents would be what, like, so let's say $4.50. So it would be, just pull up a calculator 1 second. So it'd be $10.
They're not charging the 15% on top because that's,
you
see what I'm saying?
I'll rework it. So it's $10 minus the feed gas right now is $4.50, right? So now you've got 50.55. The cost of liquefaction is going to be, let's say, 75 cents because inflation and all that good stuff. And then minus another 80 cents for the shipping cost, according to them. So right now they would get $4 basically, $3.91. Okay. So maybe that's what we should use.
Which was closer to what you were showing on the slide.
Yeah. So I'll rework it to basically just show what the representation would be for these guys from a net spread perspective. But I wonder if there's anything else that goes into it. But we'll see.
I mean, it depends on if they're shipping it themselves or not. If they're just doing, if you think about it, like if they're just doing, anyway, I mean, it depends if they're the ones shipping it or not. Because if they're not shipping it, they don't have the shipping costs.
Yeah, the other thing is the cost of liquefaction. Where do they get that number from? Is that the
to run
price?
The facility?
Right.
So you're not charging the $2.25 because, and if you go back to it, they were saying if you go below, they're saying that they're going to try to get fees of $2 to $3.
Yeah.
And so of that $2 to $3, you have the cost of actually operating it, which is at 69 cents. So you're actually getting really good EBITDA margins on that. And I'm looking at it. A lot of the contracts for CP2, they're charging between $2 and $2.50. So
Yeah, they
if
have been
that
getting
is 69 cents, then
Yeah.
you're looking at almost $1.80 to $2 for pure profit
Yeah.
on those liquefaction fees, which is good.
Yeah, this is also another good thing that as a result of these increasing interest rates, rising labor costs, blah, 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 we expect fixed fees to approach $4.52 MMBTU over time. This is the price needed to fully amortize project financing at required debt service coverage levels and still provide a return on equity to developers. So this right here is the profit margin, is the profitability that they need to get a decent return. And the way that they're going to get that $4.52 per MMBTU is by having a combination of liquefaction that they sell for fixed fee, which is like $2 to $3, right? And then probably like the spot cargoes are gonna what is that thing called? Are gonna be in excess of that $4.52. So that this way now you average to $4.50, right? So
Yep. But another piece that you're not wrong about, Chris, is they could also charge like on that shipping fee part. If they own the boats, if somebody, let's just say, doesn't contract them, I'm sure what they can do, like you stated, is give that shipping fee. So like they can be like Tokyo Power, for example. Tokyo Power could, and I'm not sure on the contract, but they could say that, hey, we actually want you to deliver it. And if they want to deliver it, then they can upcharge for that particular fee. But I anticipate it's just a regular spa. I don't think it's anything to do with actually shipping it itself. But I could be wrong.
Well, that's the thing. I think what they want to do, or at least that's what I thought that they would eventually do, is go to these longer term contract, what are they called, like off takers, and just say, here's the landed cost, right? Like we'll guarantee you a landed cost because we own all the what is it called? We own all the shipping, we own the regasification. You don't have to worry about it. And basically you just pay us based on the gas price that we've negotiated at the end. Right. And so that's why I think they're building up a fleet too. So that this way, I mean, if you're an off taker, dude, you love that, especially if you're like a utility like Tokyo Gas. You don't have to worry about shipping, like prices on shipping. You have to do contracting. You have to deal with the logistics of that BS. Literally all you have to do is just, you're getting natural gas to your facility and you're paying a fixed fee for the next 20 years, So this is the other thing too. Look at the price of Atlantic freight for natural gas. It's jumped from like $20 a day to now almost $100. I don't know what the hell happened. Do you know why this is happening right now? Why there's such a spike? Do you know why there's a spike in LNG freight rates daily?
Not sure. Atlantic is actually the facility that I helped feed gas to back in the day, back when I was a Caribbean boy. Yeah.
Look at the freight rates. The freight rates went from about $20,000 per day to now almost $100,000 a day. I mean, bro, I hope Venture Global, all that shit, those ships are just raking in that cash right now. That'll help the bottom line a little bit.
It's definitely starting. You can check it out. They have a separate line item in the earnings report. It's called DS&S. So they have obviously Plaquemines, they have Calcasieu, and then they have DS&S separated. And you can see what the revenue was for particularly the ships. And to give people an idea as well, is like you could have different types of contracts while Chris is pulling that up. And the majority of them are free on board, what they call FOB. And so that basically what that's saying is the buyer is responsible for transportation costs, unloading, import costs, etc. And then they have what's called DES, which is delivered ex ship, and that's their seller, meaning Venture Global in this case, would be responsible for the freight, insurance, and actually delivering the goods to the port of destination. And I think that I want to say that of the no, that's Rio Grande. Rio Grande only has one contract that's DES. I don't know if Enter Global does any DES type contracts. Let me look in the background.
Let's see. Control find. Just download the filing and open it. Sometimes Fiscal does a terrible job of.
Yeah, so while you're pulling that up, Chris, so just double checking. So using Notebook LM, Venture Global does not have any DES spot contracts. So
Okay.
they would all be free on board, meaning that all the people that are buying are responsible for capturing. And so
right here,
what
the
this is
company has multiple
saying,
operating segments, including the company's 5 LNG projects, its DS&S business. There it is. You're right. There we go. Here we go. So they generated is that millions? They generated 688 million
in revenue, yeah.
Huh. Cost of operations. So they generated about $56 million in profit and income
In the
from
quarter.
their shipping. It's
In
not
the
bad.
quarter, yeah.
That's
And
not
then what
bad.
about last year? It was basically nothing.
They lost
They
35
lost
million
money.
because
But then I
they
think
had
on the next it shows the whole whole 3 quarters for the year, and I think it's like 150 million or something.
Yeah, $150 million income from shipping.
And that's with 2 boats, I think.
Now there's more. They've got about 4 or 5 now.
Now, yeah, but
get,
I'm just saying the whole time that's
okay.
pretty much what we've been.
Yeah. Last year they lost $46 million on their shipping segment. So yeah. All right.
So, yeah. Might
Nice
be able to
little,
use that. I'm curious if nice little side income, you're right.
Yeah, nice little side hustle that they got going. I mean, it's not much, but I mean, when you consider it, that's like 1/10 of the Calcasieu project that they've made money on. And this is with the Calcasieu, the first quarter being spot, and they're getting premium spot rates. I mean,
Good point.
This is kind of sad to see, like how much the money that they're making on Calcasieu. Like last quarter, 3 months ended, they only made income of about 117 million from Calcasieu.
Yeah, it's definitely going down.
117 million. I mean, you multiply that. I mean, that's the fixed. This is this long-term spot deal, so it's about 400 million per. Not 400 million, like 500 million per year in income from Calcasieu. And then plaque mines are just getting ramped up, so that's about 1.2.
The thing that I don't know about with Calcasieu is it doesn't seem like it's getting. It's definitely above nameplate, but I don't think it's getting nearly the amount of love from a nameplate perspective as say Plaquemines. So what I've seen in the past is like Calcasieu is getting like 11 or 12 MTPA. Versus it looks like you're almost getting twice as much twice as much excess capacity from Plaquemines. So like if you were to say they were the same, then you'd only be getting about 24 MTPA out of Plaquemines, but they're expecting closer to 27, 28 MTPA. So instead of getting a 20% increase, they're almost getting a 40% increase of nameplate capacity, which makes you think a little bit.
Yeah, so the run rate right now, I don't know if this is going to be I'm not like using the spreads or anything right now. So it's just going to be next year from income from operations. It's going to be about this times 4. And then this times 4. So yeah, at current run rate, they would be doing about 5.6 billion in operating income, right? Income from operations, and then eliminations like corporate charges and everything else. Like let's say for shipping and everything, shipping is probably going to be like 200 million plus on there, depending on when they get the deliveries, because I think they have 2 or 3 more boats coming online, so that might be like 200, 300 million. So let's just add DNSNS is probably like, let's say 300. So that's going to be equals to this plus that. So it's about close to 6 billion in op, right? And then corporate eliminations and total expenses is going to be 500 million. And so operating income is going to be this. No, this is operating income right now, what they're estimating. So they're estimating, wait, how much is it going to be from corporate eliminations? Revenue, so that's negative, operating costs, maintenance costs, total expenses, about 500 million. How are they doing this? 1 second. Okay, so they're subtracting this minus that? How do they get the corporate eliminations? Like income for taxes. All right, so roughly they're going to do about 6. I'm not going to go through the math right now, but they're going to roughly do 6 billion in EBITDA based on if, let's say, all in all everything was the same as they have this year, which I don't expect it to be the same because of the net spread getting compressed. So it's probably going to be maybe a little less than 6 billion. Would that? No, that wouldn't be right. September, they have most of their trains already online, right? And the cargoes are maxed out already. So there's not a lot of upside excess cargoes for the rest of next year. Because I think the facility is fully, like, I think it's about like 90-something% done. So the commissioning cargoes should be the same next year. I mean, marginally, this is not going to be a lot. So I guess the EBITDA is going to be about 6 billion next year. Like, what do your calculations say? What are you thinking?
I'm thinking a little bit less than 6. You mean for 2025 or for full year?
2026, full year next year.
Oh, probably closer to 5 because
You think
they're
so?
yeah, because I mean you're not getting the full EBITDA from Calcasieu Pass anymore. Maybe you'll get something from CP2. I don't know. I'm
No, I don't think anything's coming from CP2. I do think that there's more contracted. There's a little bit more excess cargoes that should be added to the back half in Q4 and maybe some in Q1. But I'm assuming probably between 550, no, not 550, sorry, 5.5 and 6.
mhm.
You know, so if you think about it, just from an EV to EBITDA, right? You're looking at about, let's say, 5.7 billion in EBITDA times 10. That's a $57 billion minus the 30. I think the debt right now is 30 billion, right? Roughly. I think it's 30 billion. 30 billion, so about 27 billion would be the, what is it called? The enterprise value, in which case divide that by the shares outstanding. I think the shares outstanding is about 2.5 billion.
Yeah.
All right, so 2.5 billion. Let's just do that. Divide by 2.5. So you got yourself like $10. It's about $10.08. 80 cents is what you would typically value this business.
Yeah, so let's just look at some run rate really quick. So here's the public data. This is something that's pretty interesting. I'm curious if this is a mistype here, but you can kind of see, maybe I should add, since kind of like December 1st of 2024.
Why did everyone put in CRN? What does that mean?
Currently, right now.
Currently, right now. Oh, that's that Amit thing.
Yeah. So this is going back to pretty much Plaquemines being just ramped up. But what you saw last month in October was there was already 30 loads comparatively to like 22 in August and September. So keep in mind that the end of the quarter was September. So I'm kind of curious, like, is this a typo, 30 loads, or was it just like a happenstance where the one that they were loading at the end of September ended up actually being in October, and so you're getting like 2 or 3 additional loads accidentally? But you're already at 23 right now, currently right now. You're on the 25th, and so I'm curious if this ends up continuing to increase, because on the run rate basis, like 101, let's just say, times 12, that's 1.2 divided by 48. That's like a 25 MTPA sort of capacity, which is pretty good, versus if you were, say, to average the 78.6 times the 12, that's only like a 1920 MTPA capacity. So it's got to be somewhere in between here. This seems like it might be a lot, but who knows? Maybe we'll end up closer with like 110 BCF a month going out, and that's a crap ton, because 110 BCF is like 110, and if you're able to get what, $2.25 each, you're looking at like $247 million a month times 12. I mean, the facility alone will be making like $3 billion, and this is at spa, right? This isn't at spa.
Yeah.
This is at spa. They'll be making about $3 billion in revenue, and you know, if it really only costs 60-70 cents to run the damn thing, you won't be hurting. You won't be hurting. So,
Yeah.
but the thing that's kind of been intriguing to me is if you were to get rid of Plaquemines and look specifically at Calcasieu Pass and go back a couple years, I think it started exporting in like the middle of 2022. So let me just do January. It was a little bit further than that, but like it goes back to talking about how I was expecting Calcasieu to do a little bit better in terms of export. Like if you're only at, let's just say you're averaging 43 BCF a month times 12, and then divide that, you're only at like 10, 11 MTPA. Like you're not.
You see, this is the funny thing, Matt. This is why all those stupid projections that people are making, like, oh my God, like that whole the lawsuits that Venture Global is going through is going to bankrupt them. And I'm like, they didn't even make that much more money. Like Calcasieu Pass wasn't like this giant facility that was just exporting a ton of cargoes at the time.
Yeah.
You know, so I think the total exposure that they have, some people are saying it's like for some reason, some people think it's like a $10 billion exposure. And I'm like, nah, it's probably closer to like 3 or 4. Like, you really think that the what is that thing? Yeah, we'll stop there. We'll stop there because I forgot that you can't talk about it really. But
Well,
yeah,
I
I think
go into depth much
yeah,
about it,
but I think Plaquemines is going to be, it's going to do really well next year on spot. The only thing is, man, I wish the spread was like $7 or $8, because that would take out so much of that debt. You know, that would literally pay for the facility if they had a good year. And I think that's one of the things that you have to deal with when you're investing in oil and natural gas, right? Where you're at the mercy of the weather gods. So,
but I mean, you think about it, man. I mean, I think a lot of people are not truly giving credit for the future expansion. And I need to update this part because obviously they've been selling like gangbusters, the CP2 volume, but like just CP2 phase 1 is just as big as Plaquemines. And
Yeah.
so you think about it, like I just told you about $3 billion worth of revenue at SPA, right? Imagine if it does go back to the $5 or $6 spreads, and we're not talking about, just the SPA pricing, but if you do have that flexibility to sell at spot, and you do have Calcasieu Pass 2 phase 1 and 2 online, I mean, you're talking about a crap ton of money. And so it's we'll end up seeing. But to me, I mean, if you think about it, you're going to be making $4.5 billion in revenue from Calcasieu Pass 2 phase 1 and 2, and then Plaquemines itself before the expansion is going to be making $3 billion in revenue, and the EBITDA margins on that are pretty healthy. So
Yeah.
if you start to think, it's going
So-
to make a decent amount of money.
I'll tell you guys, my goal by the end of next year is to have 100,000 shares of Venture Global. I am at about 1/3 of that right now. So I'll let you guys no, it's a little less than a third. It's less. Okay, it's probably like closer to a quarter. It's a quarter because I've been buying like here and there. But yeah, I think we've got time. I'm not like, oh my God, I need to rush out there and buy the dip. I think right now, while the market is kind of just digesting the information, but when it comes to oil and natural gas, this is one of those things that you have to deal with, unfortunately. You're going to see these fluctuations happen based on the price of the commodity itself. Eventually, Venture Global is not going to have this level of fluctuation in its stock price. Why? Because so much of their production is going to be guaranteed that the only things that's going to move up and down is probably the profitability margin that just goes up slightly and down slightly from their excess cargoes that they have. Because I mean, if you look at the facilities, they're going to be about 80% contracted with about 20% of leftover for any opportunistic what is it called, events like Russia war. Like natural gas is one of those things where you kind of want to leave a little bit of excess just in case, because that little bit of excess could be like the biggest payday ever. I mean, look at Cheniere. Most of their stuff was contracted. They had very little thing, but Cheniere was able to make a buttload of money because of the price difference during the Russia war thing. So I am gonna, like I said, my goal is to get to about 100,000 shares of Venture Global by the end of 2026. I don't have a lot of side cash right now because I deployed a lot of money into Meta. Maybe that's where we can kind of like finish our conversation, and then we'll stop from there. Yeah. So, in my opinion, Meta is one of the best plays in the market. I have been buying Meta. Me and Matt, we were buying Google when everyone else was writing it off. Matt, are you buying any Meta?
Slowly here and there. I'm not against it. I just don't have enough cash. So as soon as I get any cash, I've been buying a share here, a share there. Yeah.
A share here, a share there. No, I hope my wife is asleep. I bought like $750,000 of leaps on Meta that are doing really well. But they're all the way into 2028. I am very, very confident in what Meta is doing, and I think it reverts to the mid 7 to low 800s rather quickly. And my goal is to basically, when it gets up there close to it, I'm gonna sell like $100 calls against it for 2028. Not $100, sorry, $1,000 calls against it for 2028, and get hopefully 70% of my initial outlay out. And so now basically what I'm doing is letting the profit do all the work for me, and the money that I have back, I'm just going to like sprinkle it around in the market for other opportunities. Mm-hmm. So
yeah,
I'm pretty good right now.
When you take that 70% off the table, do you have any thoughts as to you're going to do, you're going to wait. Obviously, it's some time out. But is it going to be something in low risk, or is it going to be?
Yeah, fixed income stuff. I'm probably going to use some of it for venture global, believe it or not. So
Yeah.
the goal for me is what I want to do is, like I told you, my 60% of my total portfolio is in fixed income, like those Brookfield property preferred, some Verizon. Oh, what the hell just happened?
Still here.
No, I
And
think
then
my
maybe
wife just
blew
turned
up.
off all the lights.
She heard. She heard you.
Alexa, turn on all the lights.
We gotta start saving money.
What the hell just happened?
She cut you off, man. She was like, "We gotta start saving money."
Yeah. Oh, I think she did hear. Honey, was that you? She can't hear me. She's in her bed. She's in the bedroom. Okay, maybe that was her way of letting me know that I need to have a conversation after this.
One's a beep beep is in the chat.
The CFO has like when you get called, like, come to the CFO's office. I think the CFO just made an invitation for me. I better go. I'm gonna have this nice conversation after this.
I don't know.
Yeah.
You're gonna get locked out of the bedroom and put on the couch. I think that's what's.
It's all right. I've been on the couch.
saying.
Okay. No, I mean, she's awesome, dude. Like, hold on one second. I was talking to her about like the market being down like last couple of months. What's going on with my light? Come on. Come on. Has the battery on this thing gone out? I gotta replace the battery on this. Okay, whatever.
You know what I need to get for home, which I might buy myself for Christmas?
What?
So you know how in hotel rooms they have like the buckets for ice because not every room has an ice machine.
Yeah.
I don't know. I kind of like having this little bucket of ice next to me. I think I might get a
like an
an
ice machine.
Not an ice machine, although that would be kind of cool. But I think I might just get like a nice little bucket for ice and then carry it upstairs with me when I go upstairs to the office for the night. So I always have ice cold drinks, which I never have. Normally I just have them in the fridge behind me.
Yeah. So 60% of the portfolio is in just fixed income stuff. So my goal is to just like the same thing that you do, just DCA into some of your positions. So I'm mostly going to have venture global in my IRA account, where basically any of the income that comes in is just going to go right. Like I have it set right now. So any of the income that I'm getting, I'm just redeploying it back into the same dividend place that I have right now. But what I might do is convert that to just buy venture global and buy next decade. And so this way it's on like autopilot, because I like that quote that you had on Twitter. And everyone, you should probably follow Matt. He had this really awesome quote, and he said, think of buying this stock as the opportunity to borrow against it in the future, right? Mm-hmm. So it's like if you 10x'd your position in, let's say, Google, you're not worried about the price of Google anymore. You know, you're basically like, hey, I need to live. I could just borrow money at 3, 4, 5% on margin, and like I've already made all my money. Like if you have a $10 million portfolio, you just borrow $70,000, $80,000 a year on it, and the price of the underlying is kind of keep going higher, and at the same time you could just live off the borrowings.
Yeah, I mean, and it's not that they don't sell. Like if you don't believe in the company anymore and you think it's just truly overvalued, what I fear is people wanting to sell for selling's sake. And like for example, if I had sold Rocket Lab at $70 a share or whatever, that's a pretty big tax bill, Chris. Like that's
35%,
6 figures. Yeah,
35%.
And so like I don't think that people fully recognize that. So it's like if I thought that Rocket Lab was never going to zero or something, then I'd take it off the table. But I believe it'll be $100 billion company one day. So if I really needed the money, I could just borrow against it. And same thing with Palantir, my future venture global, Google, Amazon. It's like I'll keep track of them. Like, and if they're going down a wrong path, then I'll sell them. But I think those are going to be staples in the portfolio. So But I'm starting to do something similar actually with my calls. So I think people probably know, like I have some properties and stuff like that, and so I've been borrowing like against my 401k here and there to buy some of those. Now I'm fully kind of like even on a lot of that, and so I'm pretty much like 100% debt free. I mean, not I still have the mortgages, but in terms of like against the portfolio and everything, debt free. No more margin, none of that. And so now what I'm doing is every time I write a cover call or sell a put or anything like that, and I actually get a credit and I close it out, of course, I'll take 60% of that money and I'll put it into a placeholder account, which I'm probably just going to buy like long-term dividend stocks or income with, and then the other 40% is going into an account for taxes. So
yeah,
it'll be fun, and the hope is that I can use whatever dividends come from that account to buy some crazy shit. Like I don't know, like I've been really fiending for a muscle car lately and stuff like that. So
like an old classic, like 1970s kind of muscle car.
Yeah.
Okay.
Yeah.
All right.
Nice Chevelle or something. I don't know. I'm getting bored. 34 single has money, so I don't know what else am I gonna do.
Go to Thailand, bro. Become a passport, bro.
I'll lose all my money.
Yeah.
But yeah. But no, I agree with you. I think Meta is way oversold. Just looking at the cash flow from operations. I mean, Steve and I went through as you have, I think, all the Mag 7, looking at their trailing 12-month ops income, 12-month cash flow, and it's just like Meta. I don't think is getting the love it deserves. So for it to crash to $600 a share, it was trading at something stupid like a 16 times forward earnings, and it's growing like gangbusters. So it just doesn't make sense to me. And I think that, and this is something when I was actually
11
starting to get bullish.
Matt, 11 times forward earnings.
Oh, was it really?
Look at it. It's crazy where it is right now.
And it might that 16 might have been before it dropped. It might have been that 16 might have been when it was in the 700s. But the way I look at it is like Reality Labs is probably going to be something that actually shows up positively in the next 5 years. And when it does, it's going to have a mind of its own. It's probably going to be $1 trillion business. I just don't think that. I just don't think they haven't figured out yet. But I think he has time with his family of apps aspect of it to afford to invest in that, and then eventually when that does start churning out, just like Google Cloud, right? Everyone was like, Google Cloud's useless, they're never going to win. And look at Google Cloud now, right? Like it's going to make $15 billion in net income next year. It's insane.
Look at this. So this is their EV to EBITDA multiple. So Apple's forward EV to EBITDA is 25. Google's is now 18.53, where literally last year when we were screaming at the top of our lungs to buy Google, it was 10. Now it's doubled to almost 18. Then you've got Amazon, which is 12, and Meta, 11.72, where literally 6 months ago, not even 6, like September, it was about 15. So this thing is going to get re-rated back to the 15s. So you're talking about like in the short term, 780. And then if you just look at their EBITDA growth rate right now, right, it's about 24% per year. You know, you're looking at, I think this thing can easily in the next couple of years get to $1,000. Like, I have no doubt in my mind that it gets to 1,000. So as long as they keep executing, and there's a lot of fundamental reasons why this whole AI wave is going to be very beneficial to Meta. And even so on Twitter, I posted this some funny stuff where basically you have let me just bring it up. You've got Google and Nvidia beefing right now because of this whole TPU debacle. And I'm like, one of the biggest benefits is companies like Meta, who are prime buyers of this GPU, of GPUs and TPUs and all this other stuff. Because now you can actually play against, one second. You can actually play them against each other. Look at this.
Yeah. Well, that's the thing. Meta's not doing anything super crazy. Like, maybe with Reality Labs they are, but like, you made me crack up with
Which one?
The Jensen.
Oh, this one? Congrats. Yeah, NVIDIA. Dude, I was not expecting this out of NVIDIA. This was just not
So many people copied you, by the way. I thought it was super funny.
Yeah.
Did you see the one that somebody actually screenshotted and put Jensen's face on that kid's face?
Yeah. I saw that. I was trying to figure out how he did it. There it is. This one right here.
That's great.
Dude, some of this stuff is awesome. So this was a little clip I made this morning. Basically, you got NVIDIA, the old man, and a knight comes up, pushes him, and just sits there. I'm not gonna play it because it might get us demonetized.
Yeah.
See, I'm more conscious about that these days. But yeah, Google was definitely the play to make last year, and I think this year the play to make is actually NVIDIA. So,
NVIDIA, or you mean Meta? You mean
Meta? Sorry, Meta.
Yeah. I know what you meant, but I agree, man. It's not binary, right? Like, it's not like NVIDIA is going to lose everything and Google's going to win everything. There's places where, although I do see a lot of potential where Google can catch up a little bit, but I think the problem is right now is that everybody's coding languages are so set on easily utilizing NVIDIA chips. So if the TPUs become a little bit more flexible, I could see a world where some of these applications and things are potentially going to be more used by GCP, which I'm assuming is what Meta is going to be doing, right? Meta is just going to be using GCP to be able to take advantage of these TPUs. But for anybody out there that's listening doesn't necessarily understand that TPUs are very they're basically hyper focused CPUs, if that makes sense. So they can't process like video games or anything like that. So it's not like Reality Labs is going to be running off of these TPUs. What I think that they're going to be doing is really just trying to do machine learning associated with their family of apps products and Meta, because that's kind of simple data, right? You're just kind of analyzing text. You're not really trying to make like any specific video graphics or anything like that, like the Reality Labs is doing. So I think it's more specifically about, hey, if we have really simple data that we needed to use, let's just use these TPUs versus utilizing these NVIDIA chips, because it's literally going to be half the cost. And so I wouldn't be surprised if in 2 to 3 years, you actually see margin expansion in Meta as well, because they're utilizing these TPUs versus potentially utilizing other GPUs and stuff like that. So we'll see. We'll see what happens with that. But it's not like there's how do I say it? There's things that the NVIDIA chips do that the TPUs can do, but the GPUs are more expensive to use in those particular cases. But when it comes to things like graphics, video games, processing for certain things, like the GPUs still win outright, and the TPUs can't do them at all. And so it's not like you're going to have these Google TPUs coming out of nowhere to just like completely disrupt NVIDIA, right? There has to be a game for 2 or 3 big players in this space. I just think that there might be a segment of the market that Google takes, and it might just be the simpler sort of algorithms that need to be solved much quicker and cheaper than, say, the more complex experimental research type work that the NVIDIA chips are doing.
Yeah, I mean, look at these companies and how much cash these guys generate. Like Meta generates right now $102 billion in cash.
TTM,
yeah, in cash. Then you've got Google generates 133 billion in cash. Microsoft generates 136 billion in cash. Amazon generates 121 billion in cash. And then you've got Apple, which generates 108 billion in cash. But see, this is the thing. Look at Apple. It generates cash, but it doesn't reinvest a lot of that money in future. All it really does is keep just buying back its own shares. right? And the
Yep.
value, the market is giving it a crazy amount of value where these guys are like taking on risk and, you know, going the extra mile to do X, Y, and Z. And if you look though, the CAGR on their cash flow has just been growing, whereas Apple has just been stagnating.
Flatter down. Yeah.
But at the same time, everyone gives Apple such a giant
Multiple. I don't understand
multiple on it. Well, I mean,
Yeah.
I think the reason why is because there's no risk, right? You're basically just chilling on the what is that thing called? You're just, you know that you're going to get a guaranteed return from Apple, whereas Meta is spending money on Reality Labs, so some of that cash flow is going to go there, and they're building out data centers, so money is going to go there. You know, same thing with Google; they're building out data centers and all this. So people are saying, well, what's going to be the tangible ROI going forward? And one of the bull cases that I have for Meta, as opposed to everyone else, is that compared to some of the other guys, you can actually see Meta generating tangible returns immediately as they're investing, right? So if you just look at their revenue growth post ChatGPT, I mean, they didn't add a whole bunch of users. It's not like they went from, you know, like, I don't know, I have to look at the total number of net ads that they have in terms of like a user base. They didn't add a whole bunch of users. I think at this point, the family of apps is actually pretty mature for Meta. But the thing is, it's that monetization engine that Meta has that people really underappreciate, you know? So if you look at their revenue, look at this, like 2 years ago, so it'd be around September, right? 2 years ago, they were doing 126 billion. Now they're doing almost 190 billion dollars in revenue. How do you get that? How do you get that kind of growth? You can only do that if you really optimize the crap out of its out of your targeting. That's actually value accretive to advertisers. So,
and this brings back a point that I had with Steve I don't know if it was last week, whatever, but we were talking about a similar topic. And he was just like, but look at Apple, the EPS. I'm like, I don't care about the EPS, Steve. Like, as much as you want to care about, it's like there's two parts of the equation to the EPS. There's the actual overlying net income, but then there's the total share count. And so you can manipulate EPS. So I encourage people, EPS is important to an extent because it allows you to kind of look at things, but I like to look at the overall profitability of the company. Like, I own the company. Like, I like to look at it like that. Like, take it one for one. Don't split it up into individual pies. When you talk about yourself, yes, but when you're doing like a company analysis, I like to do it this way, where you have literally, you don't split it up into little pieces that can be manipulated, and you know. So to me, that's what I like to look at, and you know, I like to look at the whole pies. So it's like same thing with Amazon. Like, I like to look at it from a cash flow from operations perspective. I like to say, okay, the depreciation is a piece, but you have to think they're in a different game than Google, etc. So I like to look at it on an EBITDA basis, cash flow basis, because certain things can be manipulated. And so, I was telling Steve, I was just like, you might be sitting there being like, look at EPS growth, but for Apple, but I'm like, it's the net income's been flat. Like, I don't want any part of a company like that unless there's a particular reason, right? And for me, the reason is exactly what you said earlier, which is lack of investment, lack of innovation, and so all they've been focusing on is buybacks. And to me, you know, I think you said something yesterday or last week that I think is pretty interesting. It's like, maybe that's what Tim Cook promised Buffett, and that's why Buffett was like, you know what, I'm going to ride this out. They're not going anywhere anytime soon. They're going to be a massively profitable company, and all they're going to do is buy back stock. Like, you know, that's something I can get behind. But now I think what Buffett is seeing is they've kind of just been flat for the past 3 years in terms of total net income. They're not innovating. Cook is probably going to retire in 2 to 3 years, and when he does, like, what's that going to be? It could be the best thing that ever happened to Apple since Steve Jobs, where you, like you stated, they bring back another innovator who's willing to take risks, who's willing to invest part of that large chunk of income, versus continue to just buy back a shit ton of stock every year. Or you just get more of the same, and you get into a place where some of these companies just get into a lull where they don't innovate. All they care about is buybacks. They're a mature company, and they fall from greatness, right? So I'm really curious. I think Apple's at a pivotal point right now.
Yeah, no, I agree. I agree. I mean, you can see here for Meta, their EPS kind of started to go down during the whole 2022 scenario where we had a bunch of over hiring and everything. But look at this. Ever since then, their EPS went from $8 in 2023 to $27.26. They had that one-time charge right here last quarter, and that's what really threw a lot of people off. But like I said, it was a non-operating what is it called, charge that they had. And December is usually their strongest quarter, so you can see here, look at this move up last quarter. Same thing with from 2023 to 2024, huge upward movement in earnings these last quarter. So I think they're going to do a crazy amount of growth next quarter, and it's going to just reaffirm to people just how strong of a business Meta really is. And I think the market will eventually catch up to it. So, but if you look at it on a TTM basis, without this one-time tax charge, I think their earnings was something like over here around, let's see, on an adjusted basis, what the quarterly thing was going to be. I think it was going to be something like, I think it was like almost $8. That's like a 16. 1 second. Let me see if I can get in a adjusted EPS. Okay. Yeah, so you can see here on a next year adjusted basis for December 2026, it'll be almost $9, right? And if we annualize it, can't do last month 12 trailing, we'll have to do an annual. Next year, they're projected to do roughly $34 in earnings. Just pretty insane, you know.
Yeah. The thing that bothered me about Meta earnings is you need to tell me of some of the best analysts in the world looking at some of these companies, and they couldn't have forecasted that there would be a big beautiful bill impact. That's what's somewhat concerning to me. I have a strong feeling that, I mean, I know these CEOs talk to these banks because they're answering questions all the time for sell side, etc. And so I find it hard to believe that that the one-time Big Beautiful Bill Act material just wasn't taken into account by all these analysts, and it was a complete surprise because everybody was like, "What do you mean there's a one-time tax item?" And everyone was forecasting so EPS was down against forecast by 80% or something stupid because of that. And I'm like, "What do you mean?" I was just kind of thrown off by the fact that revenue was still so good and above expectations, but then you had this impact that nobody foresaw coming. It just kind of seems off to me. So I think, like you stated, I think buying here is not, if I had more money, I would. And in fact, maybe I should look at my portfolio and trim some other things and see if I can buy more, to be honest.
There's some people like Chris shilling Meta for $750,000 naked options. I mean, there's a lot of companies that I don't mind shilling for. Meta is not really shilling, dude. It's literally in your face obvious. You can't, I don't even know how you could shill Meta. I mean, it's $107 billion for God's sake. Okay, the other thing, someone's like, why are they investing in data centers? Dude, you need data centers. That's how you optimize your ad targeting engine. And that's one of the moats that you have. You have better data than every other advertiser that's out there. And if you have better advertising algorithms that you can use, you're literally providing value that no one else has. And you're creating your own ecosystem. So I think just leave the business to Zuck, okay? Zuck knows what he's doing. Out of all the people that you need to have faith in when it comes to capital allocation, Zuck may seem like he's a little bit crazy, but this is the same guy that, started this thing from he's the only founder, by the way, outside of Elon that's still with the company. Google, Sergey Brin is back a little bit, but he's basically retired, right? Bezos is gone out with Lauren Sanchez, just chilling on a beach somewhere, and once in a while he'll pop up for what is that thing called, for a Blue Origin launch. Tim Cook has passed away. You know, Bill Gates is nowhere to be seen at Microsoft. It's all Satya Nadella.
Steve
at this
Jobs, you
point.
meant not Tim Cook, but yeah. I know what
Yeah, sorry, Steve Jobs. Steve Jobs. Yeah. So the only founder-led guy outside of Elon left. I mean, Ellison's there too over at Oracle, but I think he's just as a chairman. I don't think he's really like knee deep in the company.
But
yeah,
did Bezos walk away as chairman? Or is he still chairman? I forget.
I don't think he's chairman anymore. I think it's
don't
just
remember.
Andy Jassy. Let me see. Hold on. Let me share screen.
You might be right.
Let's see. Amazon. Oh, Bezos is still chair.
Yeah, okay.
Yeah. Jassy's the CEO. Don't really know who the CFO is. Matt Garman. Yeah, so that's the executive team. And then the directors. You're right. The executive chair is still Bezos, Jassy. Let me see if there's anyone else she was awesome. I actually met her. Indira Nui. She's the CEO of PepsiCo.
Is she still? I thought she retired.
She retired. Former.
Okay.
Yeah.
When did she retire? It was rather recently, wasn't it? It was like the last 2 years.
Let me see when she retired. I'm not sure, but she was also on Schlumberger's. She was a director on Schlumberger's as well.
Man, Chris, we got to talk about how to get on these boards.
We gotta buy a bunch of Venture Global, and then we gotta nominate ourselves. I mean, me and you, I think one other person are the only ones that really talk about Venture Global. So maybe if we like organize the crap out of ourselves, but then again, like I will nominate you as the board person. I can't be on the board. I don't have nearly the amount of knowledge. I don't have nearly the amount of knowledge it takes to make
I'm just gonna sit at their headquarters on my days off down
and collect
in
the
Houston,
fat paycheck.
and I'll just be like, hire me for the board, and they'll be like, you don't work hard enough. I'm like, you're right, but
I mean, that's what you do as a board of director. You just sit there. You just go to the 12 meetings a year that you have to. Most of these people don't do shit. Board of directors is just you're lending your industry experience and your connections here and there. So Chris can run commodity hedging. Hell no. I'll lose money. I am not a good. I will tell you right now, I don't have the patience for that kind of stuff. Matt is better off with that. Matt thinks long term. So Matt is a lot better with stuff like that. So yeah.
who's the guy sitting out front of the headquarters with the Chevelle every day? Yeah, that's me.
You know. By the way, they get access to you could get access to the LSU games, you know. They have
access with Doug, but
I don't know if you saw this, but
he doesn't know it yet, but
Venture Global is a sponsor, I think, of LSU's thing. Hold on.
Yeah, so for those of the people that watch, Doug Dallas is a buddy of mine here in Houston. He's also starting up his YouTube, and he's a smart guy. But
Stop wearing those sunglasses, Doug. Stop wearing those sunglasses.
He can pull it off, man. Doug can pull it off. But
no, he
sends pictures of the Venture Global stuff all the time.
Yeah. See, Venture Global is on the LSU game. So anytime I'm watching an LSU game, it's like, oh, look, Venture Global.
They're killers, man. And I'm cautiously optimistic that the same thing. I'm just gonna talk about doing it. I'm just gonna pick it for a board seat. I'm cautiously optimistic that Venture Global is getting the same treatment that Palantir got, where they aren't offering as much of a share of the company up as they wanted, and there's still a lot of insider ownership. They're doing things in a non-traditional route, just kind of like Cheniere, right? Cheniere is like not a oil and gas producer, but they are an LNG exporter. Venture Global is comparable to that. They're not an oil and gas producer, but they're an LNG exporter. They're finance guys. So I think basically they're unconventional, and so I am in anticipation that one day, just like Palantir was, I know it's apples and oranges, but eventually, once there's enough institutional ownership of Venture Global, it will become a Wall Street darling, and uh, we're not even 30% of the way done of getting all these facilities installed. I mean, going back to this graphic that I had, do I still have it open? Let me pull it open again. But going back to this graphic of sorry, the air conditioner is right next to me and it's blasting, which it should be on heat. It's fucking freezing in this room. But going back to this graphic of Venture Global.
So it's funny. Someone said Venture Global hit with $11 billion arbitration ruling. First of all, I think it was $1 billion, which is what BP is asking for. And they're one of the largest off takers. Chevron had theirs already kicked out, which was the largest. The other ones are smaller. And if they did have an $11 billion, for some reason, magically, deliciously, things went absolutely haywire, and they got an $11 billion arbitration ruling, Venture Global would just BK that subsidiary and call it a day. Because remember, the contracts are based on each subsidiary individually, right? So Venture Global would just say, fuck it, declare bankruptcy on Calcasieu, go ahead, take it. And BP would get Calcasieu basically. And that's it, and they would just cut it as a loss. That's how you do risk mitigation. So it's like right now, like Matt, let's say right now, Matt owns 5 houses and one of them has something happen, and that's a giant liability on that one house. It doesn't impact the other businesses because he could just say, screw it, go ahead, BK that one house, because that business is standalone business. So the contract that they have, as far as I know, is probably going to be with that subsidiary. So first of all, it's definitely not going to be no $11 billion of settlement. Like Venture Global didn't even make that much money the entire 2 years that they were in operations. So you can't really ask for damages to that level. So it'll be a speeding ticket. I'm sure that, the other companies will get something out of it, but it's not going to tank the entire company. And I think the market fear is just higher than what's actually the damages could be. If it wasn't for this stupid thing, Venture Global would be at least at $12 to $15 right now. But that's just what happens. Sometimes markets come in and they throw some fear at you, and you just have to go with it. Yeah.
Yep. And to me, I've always looked at this as the long term. Like, where is this going? And so, literally, in the next 5 to 10 years, they're going to have over 100. At least right now, in pre-FID projects, they have about 116. But let's just get rid of Delta, because right now they've kind of taken it off. They still have 82 million tons per annum that they need to export and or set up for export and FID. So when you think about it, we're only in about 40 MTPA of capacity. We have another 28 that's due to come online in the next 2 years, and then there's the FID for an additional, potentially 100 million MTPA. Million TPA. In the future. So overall, at its best, for right now, for what we know of potential projects, it could be up to 184. We're at 40 right now. So, and if you think about the 184 plus Rio Grande, if you include next decade in this conversation as well, I mean, you're talking about potentially 220 to 240 MTPA of export capacity for the entirety of both of those projects. Not projects, portfolios of projects rather. And the U.S. export capacity might be 350 to 300. So you're talking about 60% or more of the entire export capacity in the United States coming from these two companies. That's not to say that Alaska LNG doesn't go through things like that, but I mean, for the foreseeable future, these guys are it. Like this is it. Like, and if you think about how vital export is for the United States in terms of taxes, revenue, etc., like why wouldn't you want to be invested in that? So to me, it's kind of a no-brainer.
Yeah, I mean, this is one of those industries that's supposed to add almost $1 trillion of GDP to the country. The amount of people that are working. I mean, look at the comment that Doug made if you want to pull it up real quick. Yeah. So someone said Venture Global is being sued for over $6 billion. That is true, $6 billion, but 1.7 of it was from Chevron. That's done. The BP one, from what I'm seeing, it's about $1 billion. Then the smaller ones are all littered there. But the biggest one was Chevron. Chevron was doing, was it Chevron or Shell? I think it was Shell. Sorry, I meant Shell. It was like 1.7. That got dismissed. So that takes away a big amount. They settled with the Chinese. They settled with Sinopec outside. So that's another one that's out there. And the other ones are very small off takers. So your total exposure that's left is probably closer to 2 billion total, with no guarantees that the other billion is even going to be that the BP is going to get the other billion. So, like I said, let the court system do its thing. Let the whole situation play out. Like I said, it's a speed bump. People will deal with that. Businesses run into this. You think Meta right now is going out of business because the Europeans ruled that their, ad tech does X, Y, and Z, and they had to pay a few $1 billion? No. Did Google's entire business collapse because they had to pay? A lot of times businesses have to pay parking tickets. This is one of those times. So, we see this in New York City. Like New York City truck drivers, they all have a budget allocated specifically for parking tickets because they know they're not going to be able to find parking when they're making their deliveries, and they're probably going to get a ticket. They have money allocated. Just that's one of the things that you'll have to deal with, So it is what it is. Yeah. So the Doug, no, not that one. The other one where Doug drives by this thing all the time. See that, Doug? Next time I come to, you know what? I'm gonna try to see if I can make a trip down to Texas. And we can hang out. We could go to like Venture Global's facility. We should reach out to their investor relations and see if they're willing to give us a tour, man.
I think I did, or maybe it was Next Decade. One of the two. Well, I asked about interviewing Mike, I think it was, and I never heard anything back. But a tour might be different.
No, I just want a tour. Remember when, what's his name? TJ did a tour of the Mara facility. All I want to do is just see what the facility is. I'd love to just bring a camera out there, show people like, hey, this is a real business with real products and real actual use cases. This is not just like a pie in the sky meme. I can't believe Oklo is valued at 20 billion, right? And Venture Global is not valued, I think it's like at 16 billion, and Oklo has got no product, no facility, nothing. Yeah, probably no cameras allowed though. Yeah,
I reached out in February. I said, "Good day. I'm a retail investor in the Houston area. Very interested in covering the company. Current steer in the media is not painting venture in the right direction, the right light. And I'd like to share the company story with my viewers. Any opportunity to do so in person or video conference would be much appreciated." And then I think I sent them one of our Venture Global episodes from season 2. And then
we might have to do like a public relations campaign where we just go on Twitter and just go to just have everyone tag Venture Global and be like, guys, you need to let Chris and Matt interview you. And if they get hit with enough incoming messages like, who is this Chris and Matt character? Maybe we'll set something up.
They'll see you and they'll be like, we got to get this guy hired full time. Yeah. He knows what he's talking about. And then
I doubt it.
I doubt it.
Yeah.
All right.
See, that's the thing. When you have real money, you get invited to everything. Like literally, if you had real money, you could just make a phone call or two and go right up to the companies, and they'll welcome you with open arms. And I think that's the other thing too. Me and you are very small. Like we're so small time when it comes to like the creation game that people are like, oh, this guy, who cares about this? But I think if someone like Amit would reach out, I think more people would be open to interviewing someone who has a bigger following. And this is one of the unfortunate like things about the game. I did not think that I wanted to do more social media and, you know, gain more followers and go down that rabbit hole. But then when I went to like Robinhood Summit, I realized just the amount of networking that you can do with people when you actually have when you get invited to these events. It's insane. I met some people there, bro. They showed me their portfolio. Matt, they're loaded. Like they made so much money on Robinhood that I was like, damn, life-changing event. But they also like had a lot of courage, man. When Robinhood was like $5, $6, $7, this one guy showed me. Yeah, Chris can't even get Fiscal AI for free. They actually reached out and said, hey, do you want to be what is it called? Like a partner, because I was using it so much. It's like, yeah, sure, of course. And you know, and then I find out Tanner gets it for free. I don't get it for free. You know, they're just still charging me every month, and I'm like, all right, I'm happy to use the product, so I don't care. But yeah, I can't even get Fiscal AI for free. So just goes to show
What's
I don't
the
have a lot of
partnership
juice.
then?
Huh?
What's the partnership then? If you're not getting
It's like a promo code. Like if like someone signs up, if someone signs up, they might throw a little bit of money my way, but no one signed up using my promo code. So, you know, it's like whatever. You know.
There you go.
Yeah.
Yeah, hopefully, I don't know. It's one of those products that is very good. I wouldn't mind having it on the channel, but yeah, I get approached all the time on my personal channel about the stupidest products, like blankets, and it's like, come on, man.
No,
But
I mean,
never really.
I've got offered like a bunch of like sponsorship things that I'm just like, dude, I'm sorry. I'm not going to shill anything that I don't personally use. Like, it's just not like some of them, like Trend Spider reached out to me. There's like quite a few companies that are just doing like stuff in the finance space that reached out. And I was like, no, I'm sorry. I don't think so. Like, I'm not going to do it. Fiscal AI, I actually like the product and it's really, really good. So that's why I don't mind, like, you know, advocating for them. So yeah, ever since I started using them, like just the graphing feature, all their stuff, and it just saves me a lot of time with having to, instead of going to the investor relations page, looking for everything is just there. So I do think it's a little bit pricey though. I don't think it should be $79, but you know, people are willing to pay for it. So whatever.
$79 a year?
Month.
$79 a month.
Yeah.
Wow.
They have a Black Friday sale right now. I should probably cancel and rejoin with the Black Friday sale.
Probably.
You know what? I'm reaching out to them tomorrow. Be like, yo, throw some discounts my way at least. You know, a loyal guy. Let's see. Contact.
We got Brown supporting Brown in the chat here.
Yeah.
Brown support Brown.
How am I getting charged $79? They got a monthly subscription for $27 right now.
Amen.
Yo, I'm getting G'd, bro. No, this is billed yearly. That's why. Wait, hold on a second. How much am I paying for this thing? I thought it was $79. Am I on like some kind of advanced plan that I don't need to be on?
Got you on some Brown plan. The Robin the Brown man. That's messed up.
I'm getting ripped off by. Hold on.
Oh, you're a bargain hunter, man. What the hell? You're not. This isn't the Brown way,
bro. My, and see, this is what I'm saying. Look, I'm not even lying about it. Like, look, they're charging me $79.
Promo code is screw Chris.
I'm getting billed more.
Oh, my God, I'm about to pass out.
So I thought I was getting a deal. Apparently, I've been getting beat by these guys.
Why is that hysterical?
Fiscal AI, you got one over me.
Yeah, they're fiscal, all right. Yeah, they're fiscal for them.
I'm about to cancel, bro. The hell?
Oh man.
Maybe they gave me the enterprise version at a discount. Is that what it is? I
Maybe
think
maybe
that's
they gave you like the full. Maybe they gave you the full kit and caboodle that Bill Ackman would use. Yeah.
I mean, I don't think I used some of their stuff, so maybe I have to look at my you know what? Let's look at my account. Gotta see. No, not this one.
It is a
Yeah,
good
I'm probably
product.
on.
They do a good job. They do a good job.
Yeah. Let's
But then again, maybe
see.
I'm seeing the enterprise version. I don't know.
Do you have an account with them?
I had lunch with Roy, and Roy is also now sponsored by them, and so I
Yeah.
signed up. I haven't used it though. But
You
I
signed
made
up
an account.
using Roy's promo code and not mine?
I mean, he never
Bruh.
told me anything. All
Bruh.
you told me was that you were trying to get us a sponsorship, and then you never told me that you got one.
Look at all the names. Swindle AI. No, apparently I do have they discounted me. I have like the pro version that's more pricier, but I'm getting a discount. But I think that's like because I've been using them for so long, so they maybe got me like a legacy thing. So
My
yeah,
flyer, man, my flyer.
yeah.
I'm curious. Did you end up closing out the short leg on your BM&Rs?
No, not yet.
Okay.
I figured.
When does
I
this?
figured. I figured. Well, I'm just waiting until like closer to the end of December and just tax loss harvest the whole thing because I just have to. I'm just gonna have to do it. Whatever.
Huh.
I'm hoping that Tom Lee comes through and this thing at least gets to like the 40s again. If it gets to the 40s, I'll be happy because then most of my gains will be pretty much most of my losses will be erased and I'll just be break even because I did sell quite a bit of calls when it was really high and the IV was high. So that's the thing. I made almost like $18 on top of my buy price and I bought my average price was about 52. So I got almost $18 in credit. So if you think about it, my cost is about like roughly like $34, right? So I'm not like significantly in the loss. With the exception that remember I had to buy the shares outright at 52 and then I collected almost $18 in premium, which means that now I've got a positive gain on my premiums that I collected, but I've got a net loss on the share count. So like I said, my break even is like $34 roughly, you know? So yeah.
Okay. Yeah, I'm not 100% certain why I know I'm breaking out on my nose. That might be why my nose is so red. But why my cheeks are so red, not sure.
Do you have any BM&R? Do you have any BM&R?
No, I sold some when it dipped into the high 20s, I sold some puts at 17.5. And so those are at least did BM&R go up today? I have so many damn tabs open.
I think it went down a little bit today. It was up to almost 31 the other day. I mean, yesterday.
Okay. Yeah, I was about even on those puts. I don't remember what date they are, but I thought I think they're at the 17.5 strike. So my thought is that 17.5 is not horrible. But yeah, Doug sold at the 20s, I think, and that inspired me to look. And I waited a little bit longer in the day when it was taking a real big dump. I think it was that day it dumped like a $25 dump. And I waited a little bit later in the day just because I was just getting to messages later. Not that I'm a better, that I'm better than Doug or anything. Doug introduced me to the thought of even selling it, and I just happened to get a better price. So eat that, Doug. No, I'm just kidding. But yeah, that I think I got like $5 or close to $6 per share in credit. So that 17.5 put, technically the break even would be like $11, 11.50 ish. Maybe closer to 12. So.
Oh, they gave you the enterprise version.
Yeah, so the hot flyer version.
I'm still on the getting ripped off by Fiscal AI trip right now. But it turns out I've got what is it called? I've got the enterprise version for $79, which they usually charge $139 for. So I'm still being G'd. but I'm not being G'd as much as I should, as much as I thought I was. So
that is
sorry.
true. That was last week, and I did see Doug later that night. I saw TJ and his wife and some other folks from the chat. We got Ray and Michelle. I think don't mind me saying that we meet up quite often.
Yeah.
And so we were fortunate to have some dinner, and that was good. I think TJ may or may not be moving to Houston. We'll see.
He's moving to Houston?
He might be. Yeah.
Oh, cool.
I think they were looking at houses. So it'd be good because I like TJ. He invests very differently than I do, but that doesn't mean he's wrong. He just invests differently, and I think it works well for him. So.
Shoot, man, I know he had a pretty big position in BMNR. I don't know how he's doing with that. I think
he might have posted about it on X. I think.
Yeah.
I think he was down like a million.
You think I'm a big baller, bro? No, I'm not. I'm not even remotely close to what TJ goes in.
Nah, I need that TJ money, man. One day.
Yep.
I need that Chris Patel money too.
No. Chris Patel does okay. Chris Patel doesn't do that much better than everyone else. I will say my calls on like the best calls that I've had over the last couple of years is Celsius. Like Celsius was Carnival did really well for me.
Celsius was next level.
Yeah, I had quite a few good ones. Right now it's like, yeah.
That reminds me, Celsius took a big dump. I wonder I hope it didn't come back. I wouldn't mind actually
buying some.
40. Let's see, what is that at? Market cap was 10. That's not exactly dirt cheap. I don't know. I'd have to look at it again. But now, I mean, they're not that far off from Monster at this point because they have Alani and they have Celsius now. So, but the thing that's surprising to me with Celsius is that I would have expected their international to grow a lot faster, and it's not.
Yeah. Doug's asked a good question. Why is Celsius acting like Verizon lately? You know, Doug, I haven't been looking at Celsius lately. It just hasn't been on my radar. I know. Weeble's
another one that
You're thinking about adding?
I sold when it had that pop to like 17 or 18, whatever it was. I sold, and I've been waiting to get back in, and I just haven't. So that might be one that I wouldn't mind because I'm with you, man. It's like a $3.5 billion company market cap, and it's got like $1 billion in cash or something stupid. Like it just
and they generate good cash flow too now. They're like operating positive, you know, and long term. I mean, I think, and they've got almost 8 different broker dealers around the country. I mean, around the world. So they're getting a lot of users outside of the US. So I think over time they're going to compound. It's just people don't have a lot of patience. And this is like exactly the same thing with like Robinhood. The only thing is their CEO isn't nearly as charismatic as Vlad is. Like Vlad is charismatic as hell, bro. And Vlad is just on another level when it comes to performance. Whereas these guys seem a little bit more, I don't know. He just doesn't like the CEO. Like I listened to him a couple of times and he doesn't seem like he's, I don't know how to describe it, you know?
Yeah. Another piece is that there's not enough. I think the Robinhood investor, this is not going to come out the right way, but let me explain, is slightly further along in their journey, meaning there's just more people that have more capital on Robinhood. And so the average, and I forget what it is, I'm going to get the numbers wrong, but it's like 30% more revenue account balance per person on Robinhood than there is on Celsius. But something like that. And or not Celsius, Webull. Sorry, Robinhood versus Webull.
But dude, Webull in terms of platform for charting, for all this stuff, it is by far the best. I love it to death. I mean, you can't get like even right now, they're just got like a bunch of new updates on there for different indicators and stuff. It's awesome. I love Webull when it comes to their charting and their live data. And even though Amit does not want to and probably would never admit, he actually likes using Webull more than he likes using Legend. Amit, are you in the chat? Are you still in the chat?
He was earlier.
Yeah.
And he said he was talking trash about Meta, but I think you were too far consumed by getting charged enterprise value for fiscal.
I am still kind of a little bit heated, man, that Tanner gets it for free. White privilege. Sorry. What the hell? It's definitely white privilege. That's the only thing I could chalk it up to. Chalking it up to white privilege, bro. What's going on? No, I'm kidding. It's probably not.
I haven't gotten approached.
You know what, Matt? I'm
Yeah.
going to call them. I am going to reach out to them, and I'm going to be like, me and my boy, we shill your product every night, because literally every stream that I'm on, I usually pull up Fiscal AI. The least you can do is give me and my boy a free version of Fiscal AI, so we can, you know, promote your thing, you know. Canadian privilege. No, there's no such thing as Canadian privilege. No such thing.
You're not wrong. I mean, our videos generally do pretty well. I mean, we're generally averaging between 3,000 to 4,000 viewers per video. So
you know what? You know who's gonna be my first referral? It's Adam Bergman, my boy Adam.
Oh, really?
Yeah. Hold on, 1 second. Let's see.
Adam.
There you go, Adam. Yeah, he reached out. He's like, "What's the charting site called?" All right, Adam. Thank you. Fiscal AI.
Bergman's a good dude.
I have a promo code. Please don't sign up without my promo code. Literally, he's my only referral that's worked out so far. So I'll take it.
There it is.
Yeah.
Somebody's asking what's stopping us from investing in Webull. Nothing, man. I think Webull.
I have a position in Webull.
Yeah, I got rid of mine. Not that I disliked it or anything. It was just I was able to make. I had maybe it was spreads. I don't remember what I had, but I was up like 30 or 40% on them, and I was just like, this is gonna probably come back down. And I was hoping to potentially sell those, buy shares, and then I think something happened where I wanted to use that money for something else, and so I trimmed it, and then that was like less than 6 months ago. And so yeah, but I think I made a decent amount of money on Webull. It wasn't small, but it wasn't massive.
Nice.
Yeah, I wouldn't mind starting. It's probably now I'd have to go back and look at all the companies that I'm putting money into on a monthly basis, and that I might shrink the amount of some of the companies and maybe focus more on Webull.
Yeah. Are you buying more Palantir?
Palantir every 2 weeks, every time I get paid, Rocket Lab. So, and the cover calls on Rocket Lab are just insane.
I don't understand how Dell and SMCI and HPE all suck. How is that possible? They're low margin businesses. So the problem is, like, most of the value is captured by the GPU, right? So there's not a lot of money left over for the rack and stack people. So that's why Dell, SMCI, and HPE are not necessarily getting a lot of love right now. So not to mention, if there's any sort of like CapEx cutbacks, then these guys are going to face a problem. So, you know, I think in general, that's one of the challenges that you have to run into. Can you explain why you want to tax loss harvest BMNR? Because I have a lot of gains. I have a lot of short-term gains. So I'm in the 35% tax bracket, and then Georgia is another 6 for capital gains. So because I have a lot of short-term gains, if I tax loss harvest what I have with BMNR, I sell it, and now that offsets it. So if I don't sell BMNR, what ends up happening is and let's say I sell it January 2nd, the most I can deduct from my losses going forward is 3,000, and I can carry that 3,000 forward, but I have over, 6 figures in BMNR unrealized losses. So that's why you would want a tax loss, So yeah, I mean, when you're a higher tax bracket, think about it, it's 40%. So right now I have gains that I have to pay 40% taxes on between state and federal. So, and the thing is, like, when you're doing options, and especially if they're short dated ones, you sometimes get, you get put in a position where you have to make a choice. So as an example, I made almost like 90,000 plus on my trading account on UNH when it rode up. And I had a choice. Do I wait an entire year before I close a position out so that I can save money on taxes? Or do I think that there's going to be a pullback? And so sometimes you have to just sell. So, Unfortunately, that's
Yeah.
one of those things that you just have to deal with if you're doing options trading. You know, if you just buy the stock, you never really have to worry about that. You could just hold this thing until the end of time and never have to pay any taxes on it. But, you know, damn, Chris, move to Florida. No, I need to stop working. I have a full-time job and I'm doing all this other stuff. That's why I'm in the high. And then my wife does really well too. So she makes money. She's all, by the way, she's going fully remote. So, you know, see what
High
happens.
flyer. High
Yeah,
flyer.
man.
But no, I mean, you can carry those losses forward, right? So you might only be able to write off $3,000 a year or something like that. But let's just say you count, let's just say $100,000 worth of losses. Yeah, you might only be able to count 3,000 for the year. But say next year you have a $97,000 gain, and you can offset it and pay nothing in taxes. So, you know, don't sell just for the sake of selling. Like, obviously,
No. I have I have a lot more in gains this year. So I have to try to offset as much as I can against it.
yeah.
You know.
Well, I'm just saying in general, not necessarily you, but like I'm just telling people, like, you know, it's very dependent and situational dependent. Like, if it's something that you're like, I just need to get out of this thing, regardless, then yeah, maybe it's right to take that loss. But or if you think, oh, maybe this is, you know, not looking so good in the short term, but I think this is going to do better. Maybe you can harvest that loss, get and lock that loss in,
Yeah.
and then put it into whatever you believe is going to be a better opportunity, like Meta right now. Like, if you think that Meta is going to do well,
Yeah.
you know, of course, everybody needs to do their own thoughts and research around that. But another piece as well is you can't just sell it, lock it in, and buy back. You have to wait 30 days. So otherwise, it's called a wash sale, and it's not gotta count. So you gotta potentially keep.
Rambler's got the right thing. Short-term capital gains go right into you as ordinary income. So let's say you made $200,000 in income, and then you made another $200,000 in short-term gains. That means that now your ordinary income, quote unquote, is going to end up being almost 400,000. So depending on how how it is, it's basically pay tax on $400,000. If you do long-term cap gains, and let's say, you know, it's 0, 15, and 20, which is a lot cheaper than what you're paying as a short-term ordinary income. So, yeah. The other thing is, even when you're doing dividends, you have to be very careful, because there are certain ways that dividends work where there's qualified dividends, which get charged the preferential dividend rate. And then there are others that go in as interest. They come back to you and they get charged ordinary income. So if you're someone who has ordinary income of about, let's say, 200,000, 300,000, and then you get another $100,000 in dividends, right? But they're considered ordinary income, not qualified. That means that now you're going to be paying that marginal tax rate of that 100,000. So you think you're getting, like, let's say, a 7% yield. You're not getting a 7% yield. You're actually only getting, like a 4.5% yield, because the other like 2.5% is basically just going to the tax man. So you'd be better off doing capital appreciation. Fixed income is really good in two types of accounts. One is in IRAs and 401ks. I mean, technically you can't really invest in 401k like individually, but IRAs, you can put money in a fixed income and none of that, it gets taxed. So that money keeps compounding on yourself. Whereas if you have to pay taxes on it, it doesn't compound nearly as well. So yeah, a lot of stuff you just, before when you're doing your investing, you got to plan all those things out. I think Matt, you actually might have some courses on, not courses, like videos that you've done in the past, because you used to be a big dividend guy, right?
Yeah. I mean, videos dating all the way back to 2017 at this point. But yeah, talked a lot about dividends. I was very dividend focused until I think, like, was it 2020 or 2021, where I was about on the path to be making like $32,000 a year in dividends. And I was like, why am I doing this? I was like, I was 30 years old. I was like, why focus on that when I can invest in great companies that are, not forcing me to, because I was like, why am I going to pay like $8,000 to $10,000 in taxes this year? it just doesn't make sense to
Mhm.
force myself to do that. And I was like, it's almost more tax efficient for me to invest in these higher flying sort of companies, and then as I need to, um, divest and then move them into dividend companies. And then I started to realize, once I've kind of gotten to where I am now, like, why sell at all unless you need to sell out of the company because you no longer agree with it. You can just borrow against it. And the thought process around that, I have a lot of people reach out to me. They're like, Matt, that doesn't make any sense. Why would you do that? And it's only if you believe the company is going to continue to do well, right? Like, obviously, if you think it's at its peak or something like that, sell out of it, take your money, pay the taxes, and run. But the way I look at it is like, say, for example, at $1 million gain on Rocket Lab and I were to sell it, I'm in a bracket where I'd be paying at least 15% and then potentially another 2% to some other auxiliary taxes associated, but at least 17, 18% of that $1 million. So $180,000, directly to the government. And, then I wouldn't have an asset, right? So keep in mind, like, now I don't have Rocket Lab or anything like that. It's just cash. So unless I put it in some sort of bank account or something else, nothing generating income. And if I spend that money, like, let's just say I spend that amount of money, let's just say I spend 200, 300 grand. Now I've lost 150, $180,000 to taxes. And then I'm also spending the principal of whatever I just purchased. Versus if I just think that Rocket Lab's going to continue to grow in value, let's say 5, 10, 15% per year, and I would just borrow the $300,000 that I was going to use to buy this thing rather than sell all of my Rocket Lab or whatever, then yes, I would still have to pay, $15,000 a year, let's just say if I borrow at a 5% interest rate. But my total value of that asset, let's just say it's $1 million worth of Rocket Lab, is going to potentially grow $100,000 a year. So I'm still in the positive by, let's say, $80,000, $85,000 a year, because it's potentially growing at 10% per annum versus not having an asset at all and coming out of pocket, right? So it's not to say that's what everyone should do, right? Everyone has to kind of think about what's working for themselves, and what assets they're investing in or what have you. But yeah, that's you just got to think about it in that respect. Like, Robinhood is, their rates now, I think their max rate is like 5.25%. So why would I ever need to go to like a bank and try to get like a 30-year mortgage or something like that? Granted, it's floating, of course, so you'd have to keep that in check as well. But yeah, I mean, you just got to look at things. It just provides flexibility. But I think everyone just assumes they're eventually going to have to sell these things. And that's not necessarily the case if you truly believe in them long term. If you really need money, you can sell covered calls, you can borrow against it. There's a lot of flexibility, but you don't always have to sell it.
Yeah. All right, guys. Well, I got to get some sleep. I'll talk to you later. Matt,
Thank you, brother.
where are you right now? You're not at home, right?
No, I needed to finish working for the last 2 days, and so I'm in like a hotel near my sister and my friends, and then tomorrow
Nice.
I go to my mom's for the next couple days, and then
All
I'll be
right,
back
enjoy.
in this
Yeah.
part of Pennsylvania to visit my grandmother on Saturday. So.
All right, man. Enjoy your Thanksgiving. Everyone in the chat, thank you guys. You guys enjoy your Thanksgiving. Hopefully, Meta keeps going higher. Venture Global eventually recovers. Well, eventually will recover. Just, I would say, guys, this is one of those challenges that you have to deal with when you invest in energy. Energy is one of those things where it can make you a lot of money, and you just have to be able to weather the storm, And Matt, you've invested in energy companies. You want to add something to that?
Not just energy companies, but like, I was in this place with Palantir. I was in this place with Rocket Lab. And that's not to say just because a company's down, not sell, right? Like, you really have to understand why a company is down. And if you honestly have the conviction and reason as to believing that it can actually recover, there's other companies out there that are down, let's just say 60, 70, 80%, and they might not ever recover just based off of the prospects. So you really have to think, like, just because the stock's down, Doesn't mean you always have to DCA. Doesn't mean you always. So, but to me, I'm cautiously optimistic that this company is in its infancy. It's going to continue to do well, and I think people are undervaluing it. So, but yes, energy companies, they can be cyclical. They can fall in and out of favor, and I just think right now it's kind of a perfect storm with litigation coupled with commodity prices at the moment hitting a margin squeeze, and I think in 5 to 10 years from now, Chris was right. I think this is going to be a good company to own, and I plan on at least doubling my share count. I don't know if I'll ever get to the amount of Chris's, but
see, this is why you're never going to
I'll
be
try
on the
my best.
board of Venture. This is why you're never going to be on the board of Venture Global.
I know.
You're not willing to
I
put
know.
your. You'll be on the board of Rocket Lab, though.
Nah, I don't have nearly enough of that either.
Yeah.
Good amount though.
Yeah. They can buy Russian gas again. Ukraine and Russia agree on ceasefire. See, maybe. I doubt that the Europeans would want to tie themselves back up to Russia like that. So, but we'll see.
We will see.
Yes, sir.
Cool. All right, you guys rock. Thanks for spending the time, Mr. Patel.
Take care. Have a good one, guys.
Cheers all. Bye-bye.
That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving.
Sell it all today.
Or look at this thing. It's beautiful.
Welcome to the fucking show.